I'm going to talk to you today about the FHA ARM because nobody's talking about this program right now, and it is super attractive, specifically for somebody that's trying to buy a home for the first time. Because most people, when they're trying to buy a house, affordability is a big time issue, especially right now with the interest rates. If you're somebody that has 20% down, this might not apply to you. I mean, ARMs can be useful there as well, but FHA loans already priced so low, they're already great with interest rates. But when you think about it, using an example, the ARM is fixed for 3 years, sometimes a little bit longer. And it's going to be significantly lower in interest rate. To give you an idea, you have an FHA loan, let's say at 6.5%. Well, the ARM, if it's fixed for 3 years, could be at 6%. So it's why would you use an adjustable rate mortgage? Because I know these things have a bad rap, a bad name. But here's the truth. It's ARMs are good if you use them in the right way, right? And so let me explain. If you were to have gotten an adjustable rate mortgage back in 2020 or 2021, you would have regretted it, right? Because fast forward to today, rates are much higher, your payments would have actually gone up. But with an FHA loan right now, with rates where they're at, we know in 3 to 5 years, rates are actually going to be lower than they are today. So one of the cool things about the FHA ARM is it can be up to 0.5% lower on your interest rate. So let's say you have a 6.5% mortgage rate on a 30-year fix, or on an FHA loan today, it'd probably be around 6%. Dude, your FHA ARM is going to be in the 5.5% range. Now, why do I suggest this? Because here's a couple of reasons. First off, it's going to make your payment so much more affordable, right? So if you're a first-time home buyer using FHA, you're probably already worried a little bit about how you're going to absorb that monthly payment. Well, an FHA ARM is just going to make that a little bit more digestible, right? And then you fast forward and come time 3 years from now, if rates are lower, your mortgage payment will actually naturally drop. But here's the reason why you want to think about an adjustable rate mortgage for an FHA loan specifically. You're not supposed to live in an FHA loan forever, because that mortgage insurance, it just doesn't go away, right? It stays there forever. Unlike a conventional loan, let's say you put 5% down, after 10 years, your mortgage insurance is gone. Probably sooner because your property value go up. There's other ways that you can remove it. That's a video for another time. But with an FHA loan, it's going to stay there for the whole time. Eventually, you're going to build enough equity. You're going to refinance out of that. You're going to go to a conventional mortgage, right? But while you're in that FHA loan, the whole objective is trying to keep that payment as low as possible. So the differential here can be really substantial, right? And chances are in 3 years, you'll probably get out of an FHA mortgage. And so FHA mortgages are really good for first-time home buyers. Maybe if you don't have the best of credit, it's also a great loan program for that. But hopefully if you don't have the best of credit, you get a mortgage, you start making those payments, your credit starts going up. Eventually, you find your way out of an FHA mortgage. And so you want to really consider this type of program if you're buying a home, specifically if you're buying a home and you don't have a lot of capital reserves. You want to use a program like this. It's going to actually help you execute on a home purchase. The other great thing about it is the way that it's structured, it's going to help you actually execute buying more house if you need to, right? So let's say if somebody's approved for $500,000, that's what they can approve, they can afford. That 0.5% differential could give them another $20,000 of purchasing power at that same payment on the 30-year fixed mortgage, right? So it actually expands your buying power as well. Now, do I think everybody should get an adjustable rate mortgage? No, that's not what I'm saying, right? But you should definitely get an FHA adjustable rate mortgage because you know you're going to walk your way out of it. And you might look at other adjustable rate mortgages too if you know that you're not going to keep that house for an extended period of time, or you know you may refinance it at some time in the future. You don't need the full option period for a 30-year mortgage, right? And when you think about a 30-year fixed interest rate, those became really appealing because a lot of people got burned with these adjustable rate mortgages back in 2007 and 2008. And as a result, they just got a bad rap. And they were bad products back then, but specifically because how you got mortgages. There's a lot of people getting mortgages back then, back in 2004, 5, and 6. When I was in the business back then, they were getting mortgages that they couldn't afford, right? And they didn't even qualify for. Somebody that got a mortgage back then, simply because they had enough, a good enough credit score, that's all they really needed. They got that mortgage, but maybe they couldn't actually maintain the payments. They were getting approved for a loan they couldn't really manage. And then what happened is when rates started going up, they got into a tougher position. But today you're kind of at close to that all-time high for the last 15 years. We know that the rates are kind of come down. So there really isn't as much risk on the table. Now, let's just say if mortgage rates are right around 4%, I don't know if I would be suggesting an adjustable rate FHA mortgage. But today, in this environment, It's a great strategy, a great tactic. So you really want to consider this. If your mortgage professional isn't talking to you about this and you're getting an FHA loan, maybe they don't know enough about that. And if they don't know enough about that, you really maybe just ask the additional question, hey, do you guys offer these? And what's the differential in interest rate? Because this can mean the difference of you actually saving hundreds of dollars per month that you could reallocate elsewhere. So I want you to consider this. You're buying a house. Consider getting an FHA adjustable rate mortgage, especially if you're already getting an FHA loan. Of course, if you ever have any questions, you can drop a comment below. Be happy to answer it. You can reach out directly at any point in time. Instagram is a great way to get a hold of me, but also you could just email me. I'm not that hard to find, right? Amir at leftcoastleaders.com, and I'll be happy to share that information with you. But consider this because it is a tool for you in the toolbox. The problem is that 30-year fixed mortgages have gotten such a great reputation because they are a good product, right? I have a 30-year fixed mortgage on my house. It's a conventional loan. I got that mortgage back in 2020, right? So it's like, my rate's sub 3%. Give you some context there. I would never have gotten an adjustable rate mortgage then, and in today's environment, I would probably consider it, right? Especially because I know rates are going to come down. You know rates are going to come down, and the whole market knows rates are going to come down. So FHA adjustable rate mortgages, this can be a huge unlock for you as a first-time home buyer who's already worried about affordability. Make your life a little bit easier. This is a great unlock. It's almost like a hack right now, but it won't be a hack forever. So consider it. And of course, if you ever have any questions, let me know. But this is how we get you from point A to point B.